Zacks Rank Buys, stocks with a short-term buy or strong buy recommendation. Now, here are more Zacks Rank Buys. It is time to talk growth and income stocks now with our growth and income stock strategist, Todd Bunton, here at Zacks.com. Oracle Corporation is a growth and income stock that you've written about recently. Popular IT company, ORCL, the ticker symbol.
Yep. Yeah, they're actually the second largest software company in the world. They're famous for their database. But they actually acquired Sun Microsystems in January 2010, so they moved into the hardware space. And the company's been doing really well. They've delivered 4 consecutive positive earnings surprises as companies start to spend again out of the recession. They're spending on IT, making investments there. And that's definitely benefited Oracle. They actually recently reported their results for the third quarter of 2011. Earnings per share came in at 51 cents. That beat the Zacks consensus of 47 cents. And that was really driven by strong revenue in both their software and hardware divisions. Total revenue was up 35% year over year. And analysts have been raising their estimates off the strong quarter, as you can imagine, and they expect strong growth throughout this year and next. Based on the Zacks consensus estimate, analysts are looking for about 32% earnings growth in 2011, 10% growth in 2012. Very solid numbers for a company of this size. And the company, Oracle, has a very solid balance sheet. They generate about an average of $9 billion in free cash flow every quarter. So they've been returning that to shareholders via stock buybacks and actually a recent dividend increase. They only yield about 0.6% right now, but I would expect continued dividend hikes in the future as companies continue to spend on IT.
They're making money while they were just in software, so now that they've expanded into hardware, I'd have been surprised if they weren't looking to make more money.
Yeah, absolutely. The Sun Microsystems acquisition is expected to add $1.5 billion in operating profit in 2011.
Yep.
So it's been a good acquisition. And they're cheap too. They trade about 15 times forward earnings. The industry average is 25 times, so there's a lot to like here. Okay.
AvalonBay Communities, an apartment REIT, AVB, the ticker symbol, another one that you've written about recently. What's the story here?
Well, the apartment REIT industry is it's something we've talked about before. It's got a lot of nice tailwinds going for it right now as the housing market's collapsed. Home ownership rates have declined, apartment vacancy rates have declined, and average rents are starting to improve. And that's something that AvalonBay has definitely benefited from. They have apartments throughout the United States. They expect average rents to improve across all regions in 2011. Analysts have been raising their estimates as industry outlook improves. They look for about 16% growth in 2011, 13% growth next year, solid double-digit growth rates, and they also pay a dividend that yields 3%. And the company actually, it's very good, yeah. They have a history of raising their dividend too. Even throughout the recession, they held their dividend steady, and they actually paid out a special dividend of $1.81 a share in late 2008. That's pretty much unheard of in the REIT space. Again, that was because more favorable industry trends. Now they do trade about 25 times forward earnings. That's a premium to their 10-year average of 19 times. But given the favorable growth rates, it's not an unreasonable multiple.
Okay. Do you own either of these two?
I do not.
Check out more Zacks Rank Buy stock pick ideas for yourself at our homepage if you're not there already. We put 4 new ones up there for you daily, one in each of the investing categories that we write about. And with Todd, I'm Terry Ruffalo.